Welcome everyone to today's webinar on the 2025 priorities from the CFO's perspective. We'll be discussing how to align IT strategy with business goals. Thank you for joining us. My name is Emmanuel Rose and I am the Group Vice President, Industry Solution and Strategic Sales at Rimini Street. We have noticed a changing in dynamics between CFOs and CIOs when it comes to IT and enterprise investment strategies. We are seeing their responsibility intertwined more than ever before. Earlier this year, Rimini Street partnered with Census Research to survey nearly 3,000 CFOs and CIOs globally to explore that evolving relationship, as well as to get their thoughts on emerging technology, trends, budgets, and a lot more. And I will be sharing some of these findings with you throughout this session today. We are hosting two webinars, so you can hear two perspectives on IT priorities for 2025. In today's webinar, as I mentioned before, we're focusing on the CFO's perspective. In the other one, we focus on the CIO's perspective. So let's get started. And joining me today is Johnathan Bangura. Johnathan is the Vice President and Head of our Financial Services Industry Solution at Rimini Street. He has over 25 years of success in the banking and financial services industry globally. He has served as a CFO, an advisor to CEO, CIO, and other C-suite executive. Welcome, Johnathan.
Yes, thank you, Emma. I'm a banker and I have served in various roles, including executive banker, banking officer, chief financial officer of global banks. Banking and financial service industry is landscape shaped by technological innovation and economic uncertainty. In fact, in today's world, CFOs are venturing into uncharted territories and adapting new capabilities to lead their businesses with confidence. I look forward to sharing some of these insights of CIO journeys as they navigate the complexities of an AI-powered world. Glad to be here.
Great. Well, thanks for being here, Johnathan, and I'm excited to get your thoughts on priority for 2025. But before we do that, I'm going to share some findings from the research that I mentioned to kick off the conversation. The CFO and CIO partnership is critical for business success, but it depends on collaboration, on communication, and alignment of business goals. CFOs are getting more involved in IT decision, formerly the domain of the CIOs. This means that either the CFOs are recognizing the importance of IT to the firm's success, or maybe that they are frustrated by the tech investment results, or maybe a bit of both. It's really interesting to see the responses to this question around who is setting the direction for technology investment decision, the CFO or the CIO. Well, apparently they both think that they are setting the direction. It's pretty even, with the largest gap around setting the budget levels, where it leans a little bit more towards the CFO. So what this tells me is that the CIO and the CFO needs to be closely aligned and collaborative. Investment decision and strategy cannot be done in a silo. So Johnathan, as a former CFO, I'd like to hear your thought on this. What has been your experience working with CIOs and other C-suite to gain alignment on IT strategy and investment, and how it has evolved, in your opinion, in recent years?
As a CFO, working with CIOs and other C-suite executives has definitely changed, driven by technological innovation in the industry. CFO role itself has evolved, and successful CFOs are those who can balance traditional mandates with bold transformation, envisioning the art of possible and creating value. Gaining alignment on IT strategy and investment has always been a challenge, particularly involving CFOs and CIOs. Today, process is more intertwined than ever before, emphasizing the need for collaboration between those two roles. For example, it is no longer just a support function, but strategic partnership between the CFO and the CIO. CIOs are more involved in business strategy and aligning IT initiatives with overall business strategies and investments in current corporate world. Secondly, data analytics is increasingly important for CFOs who rely on data to make informed IT investment decisions focused on return on investment and business impact. Third, digital transformation has really accelerated over the years, requiring organizations to adopt new technologies and adapt innovative business processes. Agility is essential for CFOs and CIOs, leading to flexible IT strategies and allowing quick response to market shifts and allowing new opportunities. Finally, cybersecurity has become a top priority in the industry. As cyber threats become more prevalent and sophisticated, CFOs and CIOs are working closely together to ensure robust security measures are in place to protect the organization's assets and reputation.
Great, thank you for that. And I'm glad that you mentioned data-driven decision. Our world is certainly revolving around data, and more on that and this topic a bit later. Now, one area that wasn't 100% aligned between the CFO and the CIOs was their focus on where to invest in technology. While CIOs definitely have a strong interest in emerging technologies, they're also focused on tech investment that increase business agility, productivity, and support the business growth. CFOs in the survey were more focused on financial impact when it comes to tech investment priorities. As you can see, they are evenly split across security, sustainability, ROI, and strategic value to the business. This doesn't preclude an interest in emerging technology, of course, but CFOs are focused on results and on realizing the value of the technology investment. So, Johnathan, does that correlate to what you're seeing, and how have you prioritized funding for innovation and digital transformation that you mentioned before within the overall budget constraints?
This is such an important topic, Emma. Prioritizing funding for innovation within budget constraints is indeed very challenging. Here are some strategies that have proven very effective in the market. First, always align innovation and digital transformation projects with organizational strategic goals. This will help secure executive buy-in and justification for the investment. Then, prioritizing high-impact projects that offer greatest return on investment must be prioritized. You can do this by conducting a thorough cost-benefit analysis to identify which initiatives are the most valuable. Another funding strategy for innovation is for you to break down large projects into smaller phases or smaller manageable phases. This will allow for incremental investment and reduce risk, which makes funding easier to secure. Finally, the final strategy that I will mention is explore the use of alternative funding, like operational expenditure, which is called OPEX, instead of capital expenditure or CAPEX. Reduce operational cost, like cutting software maintenance fees in half by using third-party support, which could help extend the life of the existing software, and then you can reallocate those savings into innovation.
Excellent strategy, Johnathan. Thank you for sharing. So when we are on the topic of innovation, what are some of the emerging IT trends that CFOs should be aware of?
Leading CFOs are striving to find new sources of value. They are adapting transformative technologies such as artificial intelligence, leveraging predictive analytics to generate real-time insight, and wearing the hat of responsible corporate citizen by pursuing goals that drive success in the long run. Here are 5 key IT trends to be aware of. 1, hyper customer experience and personalization. Cybersecurity strategies, AI and automation, talent acquisition and development, and operational agility and efficiency. I will give you 3 examples out of the 5 that I've just named for you. Specifically for CFOs, I think prioritizing cybersecurity to protect sensitive data from breach, blustering, compliance, and consumer trust is critical. We are going to continue to see organizational implementation of artificial intelligence to help automate and optimize processes and decision-making. Artificial intelligence is also accelerating personalized banking for customers to seamlessly connect online or offline or hybrid experience to deliver a unified, cohesive, and personalized customer journey. And third, one that I would draw your attention to is the use of technology in talent acquisition and development. With the labor shortages in the market right now, skills gap are priority and seen throughout the entire industry. So we need to utilize technology to help recruit, retain, and upskill talent in the industry.
Great. So, and you mentioned AI, and thank you for doing that, because it wouldn't be a good webinar in 2024 without mentioning AI. But tell me a bit more. People want to know, how is it being applied? And obviously in your financial services industry, I'd love to get some example of what you're seeing in the field.
AI is transforming the financial services industry in several ways. I will share some examples with you. JP Morgan Chase, one of my previous employers, has developed an AI-powered fraud detection system that analyzes large volumes of transaction, customer data, device data to effectively detect vulnerabilities and anomalies and potential fraud, preventing fraudulent activities and managing risk in real time. Another application of AI is AI-powered chatbots and virtual assistants that offers 24/7 customer support. CIBC Bank is using chatbots to accurately handle customer interaction and provide personalized financial services, which improves customer satisfaction and reduce operational cost. AI can also automate compliance processes. For example, Bank of America uses AI for anti-money laundering, fraud detection, and sanction screening. Their AI system analyzes transaction data in real time, identifying suspicious activities and flagging them for investigation, which streamlines compliance efforts. Goldman Sachs employs AI-driven models to assess market risk and manage their portfolios, allowing them to make more informed investment decisions based on predictive analytics. FICO, which is a credit scoring agency, is also using AI in credit scoring itself. AI algorithms assess creditworthiness by analyzing various data points in the market, including non-traditional sources like social media activities, leading to a more accurate and inclusive assessment of credit risk. Finally, Capital one of the major tier 1 banks in the US, uses AI to analyze customer data and behavior, providing tailored product recommendations and personalized financial insight through their mobile apps that they avail to their customers. These are just a scratch on the surface of AI potential, because there are so many applications of AI and usage of AI that I can share with the audience, but we can leave that for next time.
No, but these examples were great, Johnathan, as the future is certainly looking very exciting. So now tell me, what do you think the CFO needs to prioritize for 2025?
To ensure a successful and profitable 2025, CFOs are expected to focus on several top priorities. And this is where finance and technology finally intersect. I will say the top priorities are the following. 1, accelerating AI adoption and digital transformation, which will be imperative to optimizing operations and achieving profitable growth. 2nd, optimizing and personalizing customer interaction and the overall customer experience. 3rd is the effective risk management and compliance are always at the top priority for every bank or financial services due to the stringent regulations governing banking and financial services in the market space. Finally, I think prioritizing agility is going to be critically important in 2025, especially for strategic investment in IT. It is essential for CFOs to be very flexible, to quickly align with business objectives as economic pressures, business needs, innovative technology, and other factors emerge throughout the trend of the market. These are priorities that help CFOs not only navigate current challenges, but also drive their organizations towards long-term success.
Excellent. Thank you, Johnathan. So as we close out today's conversation, I'm taking away 3 of these key points that you mentioned today. Number 1 is very important to foster the relationship between CFO and CIO. For CFO to take a more active role in the IT partnership and in technology investment decision to drive positive business outcomes. Second, as Johnathan, you just covered, there are fantastic applications for AI across financial services and all the other industries. And if you haven't yet started to strategize on incorporating AI to solve some of your top business challenges, then you are falling behind. You shouldn't wait any longer. And finally, if investing in innovation to help you achieve your objective is truly a priority, and it should be, you have option to help fund it. Make sure that your resources are allocated to your strategic initiatives that deliver maximum value and ROI. Anything else to add, Johnathan?
I just want to share with the audience, in the past, CFO role has just been finance, but today we are seeing a significant shift towards strategic involvement in technology and technology investment and decision making. The collaboration between CFOs and CIO has become very essential, and will only continue to grow in the near future, as effective strategy cannot be developed without integrating financial insights and technological initiatives. This is a priority. So it is an exciting time for CFOs now and in the future. Thank you.
Thank you, Johnathan, for sharing your valuable insight with us today. And to all of you, our viewers, thank you for spending this time with us. Goodbye.